Okay, hi everyone. Hi. Starting a little bit earlier today because I'm not feeling very well. I'm gonna start early and then I can go and see a doctor. Okay, just checking if everything is working. Hi Moses. Hi. Just wanna see if everything's working fine. Testing, testing. Okay, seems like everything's working fine. Audio's working. We're just gonna wait like a minute or two before I actually start so that more people can join in. Hey, hi everyone. Hi, I'm just waiting for a few more people to join. Okay, I think we should be good. Hi everyone, welcome to IC Markets Global webinar. Okay, we're gonna do a live analysis session today. What that means is that I'm basically going to go on the live charts later and show you how I usually do my analysis. Okay, please do not take this as any form of like signals group, any form of trading advice, investment advice, or anything like that. Okay, so today's the 6th of October. We usually start these webinars at 5:30 p.m. Singapore time, but I'm not feeling too well today, so I have to start a bit earlier so that I can quickly go and see a doctor after this. Okay, so this webinar will last an hour. I hope you guys get something valuable out of this webinar. If you have any questions, don't be shy, just ask in the chat box. Okay, so disclaimer, you guys already know how this works, especially those who are here every week. I will stay on this slide for like a minute or two so you guys can read through the disclaimer, but basically the disclaimer is a reminder to, really remind you guys that this webinars brought to you by IC Markets is purely for educational purposes. It is not any form of investment advice, any form of trading or financial advice. This is definitely not a signals group to buy or sell anything. I am not telling you to buy or sell anything. Anything I share with you guys today is basically my own, based on my own experiences in trading and based on my own style of trading. It is not necessarily the style of all traders, but it is basically my style. Okay, so a risk warning: trading Forex and CFDs carries a high level of risk to your capital, and you should only trade with money you can afford to lose. Definitely do not borrow money to go into trading because it's so dangerous. You could lose everything. Okay, you can make a lot of money from trading, but only if you know what you're doing. If you don't know what you're doing, trust me, you're gonna lose everything. Okay, on top of that, just be very careful. Okay, again, this is not a signals group in any way. I'm merely showing you how I would usually do my analysis on a daily basis so that you guys can apply the same methods if it works for you. Okay, if it doesn't work for you, please don't apply the same method. Okay, so introducing your host for today. My name is Cassandra. You guys can call me Cass. I mean, I'm guessing some of you would already know me, right? For those who don't or already know me, yeah, you can call me Cass. I am an investment analyst and a prop trader from Everest Fortune Group. So At Everest Fortune Group, we are basically a research firm that specializes in equity and forex research. We do a lot of back testing, a lot of forecasting, a lot of strategy testing, a lot of analyzing basically where the markets are going, how the markets work. We look at the charts a lot. Okay, so we've been the finalist for the best forex and equity research for multiple years running, and yeah, our team, we study the markets a lot. So on top of that, I am a prop trader. For those who don't know what prop trading is basically I had to take a test. Okay, basically means that I'm funded by multiple companies. I had to take a test to get these fundings. The test that I took required me to do 10% profit within a month. Hey, apparently the test is easier now. But yeah, but it required me to do 10% profit within a month. I've done 10% profit within a month multiple times already. And I've done that using technical analysis and basically whatever strategy I'm going to show you guys today. Okay, that's the same way I got it. Okay, so our agenda for today is key approaches, going through the cheat sheet checklist, and then we're gonna do the live charts. Oh, sorry, I did say I was gonna stay on the disclaimer for like a minute or two, so let me just stay here for like a minute or like 1-2 minutes so that you guys can go through the disclaimer, and then right after that we'll do the cheat sheet. Bear with me, guys. I know I sound very nasally today. I'm not feeling the best. My nose is blocked actually. Once again, we do usually start at 5:30 p.m. Singapore time. I chose to start a bit earlier today because I'm not feeling too well. I'm gonna start earlier, end it earlier so that right after this webinar, I can go straight to a doctor to get some medication. But yeah, I hope it shouldn't be too much of a problem, right? Because this is recorded. So for those who are, usually here at 5:30, you can just watch the recording, just replay. Okay, cool. So let's go through the cheat sheet checklist that I usually use on my trades. I need to pull out a pen. Okay. So the first thing I usually ask myself as a trader is price currently going up or is price currently going down? This is a very important question I have to ask myself. If I can accurately answer myself these questions, I feel like a lot of my job as a trader would have been done. Okay, so like 50% of my job as a trader would have been done. So if I ask myself, is price going up, and I can answer that it's going up or down, I can then answer my next question. Should I get in for a buy or sell? So if price is going up, I want to get in for a buy. If price is going down, I want to get in for a sell. Why? Because I am a trend trader. Okay, I am a trend trader. I am following trend. That means if you throw me into the ocean right now, I want to be following the waves. I don't want to be swimming against the wave. So I'm a trend trader. I need to first identify if price is going up or down. Then only I can identify if I'm going in for a buy or sell. So then how do I use technical analysis to see trend, look for trend? I can use a trend line and I can use channels. So for channels, you need 2 touches on top. Okay, and did not connect, but yeah, 2 touches at the bottom for it to be a valid trend line. And then you need 3 touches for just a singular trend line to be like textbook valid. Okay, so once I'm done looking for trend, I now ask myself, where do I get in for the buy or sell? If I already know that price is going up and I want to get in for a buy, okay, where do I get in for a buy? So now I pull out horizontal levels. These are like pullbacks, overlaps, significant swing highs and swing lows. And whatever Fibonacci level they are, whatever Fib levels they are, and I'm gonna use this to outline basically my entry, my stop loss, and my take profit. Okay, these are the things I'm gonna do with these horizontal levels. So to make my analysis a little bit more, to have more supporting factor, I will look for chart patterns such as wedges, triangle, double tops, double bottom. And if there are any death or golden crosses, well, I don't use this all the time, but this is something you can add in to make the analysis more accurate, give your analysis more probability to getting it right. So the settings that I would use is the 200 or the 50 SMA. Okay, that means a simple moving average. And you basically see where trend is going right now based on the SMA. Okay, so other than that, if the SMA is not really saying anything, I will try to use natural moving averages to tell me trend. Okay, so these two are usually like, sometimes I use it, sometimes I don't use it. Okay, again, whatever I'm sharing with you guys today is basically my own style of trading. Okay, every trader has a different style of trading. Every trader has a different style of trading. Okay, so once I'm done with that, I will definitely pull out stochastics and RSI. Why am I pulling out stochastics and RSI? I'm using that to look for either support and resistance so that I can find reactions, either a bounce or a reversal. And I'm also looking for divergences. Divergences means that if on the charts price is going up, but on the oscillator, which is stochastics and RSI, it's going down, it means that the indicator is trying to signal you as a trader that there is a possibility of a trend reversal. Okay, other than that, I do use correlations. So correlation means that if I am trading EUR USD, for example, and I am buying the EUR USD, it means that I want the US dollars to go down. Okay, for the EUR USD to go up so that I can buy, Euro needs to go up and US dollar needs to go down. So then I will also chart on the DXY to see if there's any correlation if price is going down. On top of that, another example for correlations is combining currencies to commodities. For example, Canadian dollars is very much tied to the price of oil. Why? Because Canada is a very big producer of oil. So usually if the price of oil goes up, the price of the Canadian dollars goes up as well. If the price of the Canadian dollars goes down, usually the price of oil also goes down. Okay, on top of that, I'm also going to use like currencies to currency to do my correlation. So a very good example is the AUD and the NZD. Usually if the price of AUD goes up, the price of NZD follows as well. They're quite correlated. I can't say 100%, but they're pretty much correlated. Okay, so once I'm done with all of this, then I'll look for either my reversal or my breakouts. Okay, or whatever bounce, reversal, or breakouts that I'm playing. Okay, so we need to do all of this first. All of this first before I can decide whether I'm going in for a buy, a reversal or a bounce. Okay, so let me delete everything so that you guys can take a photo. For those who don't already have this, you can take a photo of it. I'm gonna stay here for a minute while I pull out TradingView. Give me a moment, guys. I'm just pulling out TradingView. Okay, that should be enough time for everyone, right? So I'm going to pull out a few charts, and then these are the charts we're basically going to analyze for today. One of my favorites is EUR USD. Why? Because I find that it respects price action very well. By the way, guys, whenever you guys choose a pair, choose IC markets. Okay. Oh, okay. This did not. I am very sure I did not call for a buy, did I? Okay. Nada, hi, hello. How many hours per week are you trading? Thank you. I'm trading like 2 hours a week. Yeah. I basically come on the charts and do my analysis on Mondays, and then for the rest of the week, my only job is waiting. I don't know if you guys have heard of this saying before, but trading is 10% buying, 10% selling, and 80% of the time you are just waiting. That's literally a very famous quote. Okay, so now that we're here, I want to review some of the setups that I did last week. So the first one was this EUR/USD where I was calling for a buy from here. Okay, I was calling for a buy from here. I expected price to do this and then bounce. But you can see that price did a breakout instead, and that's totally okay because you can see price was respecting this trend line for a while. So 1, 2, 3, and then it broke out on the fourth time. So the fourth time, hi Lily, hi Buddha, Lama. Hi Buddha Lama. Oh, I just want to remind you. I just want to tell you I've been like looking at the things that has been happening in your country, and I think your country is amazing. How they're doing with it. It's really great. Okay, yeah, anyways, we did not see this last week. If I saw this, I would have called for hi Clinton. Okay, so last week on Monday, I think I called for this buy, but it didn't work out. Reason I called for this buy because price was moving this very nice trend line, two, three, fourth time. So I guess it was just luck that when I decided to enter for a buy, it decided to do a breakout. Okay, that's just like I cannot control when the market wants to do a breakout. I can only collect information and data and then make a decision out of it. Okay, so because that didn't work out, I'm gonna have to reanalyze again. By the way, even though price did a breakout, it is still an uptrend. It is still an uptrend. Okay, so we'll look at that again. But I think we did a sell trade last week on for EUR. Exactly. I remember. I don't remember calling for a buy for EUR/USD either. Did somebody change my analysis? Right. I remember calling for a sell. Do you remember my setup last week? Anyways, I came on and this is what I saw. I'm gonna have to come back. This is what I saw. Uptrend on multiple time frame buy. Okay, this is definitely not the latest setup. I think this is what I initially called for, and then later on, I did another webinar where I redid the analysis, and it was a sell. Okay, so it was, I was so confused. I was like, I remember calling. Thank you so much, Buddha. Thank you so much. I remember it so clearly. I called for a sell. I don't know. I think this analysis was before I called for the sell. I was like, I'm so confused. Why did I get this wrong? Anyways, the stop loss is here. The take profit was here, right? The take profit was, I mean, sorry, the entry was here, I think. The stop loss was here, and the take profit should be somewhere here. If I did not remember wrongly. Okay. I don't know what happened. I don't know why my latest analysis didn't show up, but yes. Um, so initially, I did call for a buy, and then later on, sometime along that week, there was a trendline breakout here that happened. So when that trendline breakout happened, I actually changed my analysis to a sell because the markets are changing, so you're changing your analysis as the markets go. And this should be my latest analysis, not that buy. Where did that buy come from? I don't remember. TP is at the latest low. So TP was here. That means take profit already happened. Right? I remember, you're right. Thank you, guys. Thank you, Clinton. Thank you, Buddha. Yes, this was the analysis that I remember. I think this was the entry, if I'm not mistaken. This, this high, this swing high here was the entry. And the stop loss was here above the Ichimoku. I remember it because there is no way I would give such a bad risk to reward. I would never ever give such a bad risk to reward because it doesn't even make sense to me. 0.9, that does not make sense to me. So I'm very sure the entry was here and the risk to reward was something like this, 1.3.2. So I don't know when this happened. I need to rewatch the videos. Okay. I don't know when this happened, but yeah, looks like the trade worked out. I don't know when it happened, but I just remember this was the setup. I did not get in on this setup. Or did I get in on the setup? Give me a moment, let me check. I did not get in on this setup, but it worked out. So I don't know if you guys got in. Again, this is not a signals group, so if you guys didn't get in, that's totally fine. I didn't trade last week. Again, I have been sick since the 1st of October. It's so irritating to be sick. I'm so tired of being sick, but yeah. I got in. Okay, I'm glad you got in. And I mean, again, this is not a signals group. It is not a signals group, but if you got in and you made this 3%, that is very good for you. Yeah, I totally remember this setup. I remember the stop loss being above the Ichimoku cloud, the entry being one of the swing highs. It should be this swing high. And yeah, so we're here. Let's redo the analysis again because this trade is over. So every time a trade is over, so okay, this is what I usually do. Someone asked me how many hours I trade in a week. Honestly, I trade 1 hour a week or 2 hours a week. And that 1 hour a week where I trade, it is literally with you guys. When I come onto the charts and do this analysis, this is the only time in the week I do the analysis. Other than okay, so why is it 2 hours? It's because today I'm doing an analysis for you guys and this webinar is 1 hour. Tomorrow I'm doing another webinar for IC markets but in Bahasa. Okay, so if you guys don't know, I'm actually Malaysian, so I speak Bahasa. Okay, tomorrow I'm doing another webinar for IC markets but in Bahasa. But the thing is, my Bahasa webinar alternates between either live analysis or a topic. So sometimes I teach a topic, which means that I teach like Ichimoku, I teach Elliott wave, I teach basically a technical analysis or basically a topic. So when I'm teaching a topic, that's when I'm not looking at the charts. But when I'm teaching live, when I'm doing a live analysis webinar, that means I do 1 hour today and 1 hour tomorrow, and I only trade 2 hours within the entire 2 weeks. And that's all I need, and that's all you actually need. If you're asking me my honest opinion, you don't need to stare at the chart. You don't need to sit in front of a computer all day, every day. That's a waste of time. You just need to do effective work. Okay, so now that that's over, let's reanalyze the charts again. Okay, so I remember on the weekly why I changed my analysis was because I saw this on the weekly, which was price is actually reaching a resistance on the weekly. So I remember I initially called for a buy, but then I don't know, someone asked me to look at the weekly charts and I went in to look at the weekly charts and then I saw that price has reached a resistance. So when it reaches a resistance, we are expecting for price to reverse here. So why is it that I take priority on the weekly charts versus like the daily or the 4 hours? Because the higher the time frame, the stronger the structure of the charts. So if I see this trend line on the weekly, I will respect it more versus if I see it on the 1 minute. On the 1 minute, it's not going to be a very strong trend line versus on the weekly. So on the weekly, I see this trend line, therefore it gives me confidence to think that, okay, it's time for price to do a pullback. It may not be a trend reversal. It may not be like, it may not be a total downtrend, but it could just be a pullback. It could just be, it's time for a pullback because again, price is constantly moving in a zigzag. You cannot expect price to keep shooting up without pulling back. So I think it's due for a pullback because it has reached a resistance on the weekly. Okay, so because of that, I'm a little bit more biased of price being on a downtrend. Okay, so on the 4 hours, you can see that price is on a downtrend. Sorry, let me zoom in so that's not so small for you guys. Okay, remember on my cheat sheet checklist, there's 2 ways to identify trend. The first one is to use a trend line. A trend line, you need at least 3 touches. So in this case, there's 1 touch here, 1 touch here. Well, technically there's 2 touches here. 1, 2, but I mean, we'll just count this as 1. There's 2 touches here. I know it didn't really touch, but if I adjust it, it will touch. See, if I just move this a bit lower, it's going to touch. Okay, so 2 touches there, and 3 touches, 4 touches, 5 touches, but we'll just count this as 1 collective touch because it's not very clear. So 3 touches is textbook trend line validity. Okay, if not, you can always just use a channel. Where's my channel? Sorry guys, bear with me again. I'm not feeling well. I've been sick for more than a week now, so my brain is not like functioning at its peak. Okay, so this channel is not working very well because for a channel to work, you need, I mean, depending on how I draw it, right? If I draw it like this. Okay, no, I'm not gonna force a channel. So a channel, you need 2 touches on top and 2 at the bottom, but you can see that it's not really touching very well and I need to really adjust it. So it's okay, we don't need to use the channel, we can just use the trend line because the trend line alone is good enough. Okay, so based on this trend line, price is expected to respect this trend line, right? So every time it comes to this trend line, we expect price to respect the trend line. Okay, so I am still biased of a sell because number 1, we're gonna write down why we are biased. Downtrend, trend line. Let me see. Okay, so the problem here is that on the daily, price is going on an uptrend. Okay, do you guys see this? This is the problem, and it has already reached the bottom of that uptrend channel. Okay, so this is a question mark time. This is a time for a question mark. Okay, because on the weekly, it's showing that it's due for a downtrend, but on the daily, it is moving on an uptrend. Okay, so which one do we follow? Let's just do our analysis and then see what the charts tell us. Right now, there's 2 conflicting information. So you guys know that when I trade, I usually like to trade when multiple time frames are telling me the same thing. But in this case, the weekly is telling me it's a sell, but the daily is telling me that it's a buy. Okay, the daily is telling me it's a buy. So it's a bit conflicting. So what we can do is just label a bit of like the key resistance levels first, and then what we're gonna do is wait for, I don't like to play breakouts, but I mean in this case there's really no choice, right? Because unless price breakout, I don't really know for sure if it's going to go down. I need price to break out for the confirmation that price is gonna go down. Okay, I'm just gonna highlight some key levels. It can reach as wide as this. It's very wide. I'm basically taking the swing low from here, the start of the swing low from here, and the end of the swing low from here to get this key level here, this box. And then from here, I then narrow down where I think the area is gonna be. So basically, for those who don't know what I'm doing, it's basically like, I told you guys, right? It's like B and S. Imagine 2 countries coming together and then they're going for war. Sorry, it's a very bad example. I was going to use Israel and Palestine. Okay, that's a very bad example. Sorry. But anyways, 2 countries coming for war and they need to meet at a war zone, right? Okay, they meet at a war zone. So they're walking, they're marching towards each other, and then they're going to reach a war zone. And then our job as a trader is to identify where is the action going to take place. Okay, so I think the action is going to take place somewhere within this red box. I just don't know where. And then now you need to narrow down where in this red box the action is going to take place. How do we do that? We use Fibonacci to narrow down where the action is going to happen. Okay, so let me just pull out some Fibonacci levels. Okay, the first one I'm going to take is this swing low here. I'm going to take this structure here to take a retracement level. I'm pulling out all the Fib retracement levels, by the way. Fib retracement levels, these are the 5, 23.6, 38.2, 50%, 61.8, and 78.6%. And then I'm going to get rid of those that are not relevant to us. So the ones that are not relevant to us right now is the 23.6% and the 38.2%. Why? Because price already went through this level. So this level, these levels were not strong enough to hold on to price. So the ones I'm going to keep is 50%, 61.8%, and I'm going to get rid of 78.6%. Why? Because 78.6% is not in our red box. Okay, we want to find the levels that is closest to the red box. So right now, these are the two levels that I've narrowed down. Okay, so we've got 50% and 61.8%, but take note, the rule about Fibonacci is, what is the golden level for Fibonacci retracement? Okay, the rule is 61.8% is always the favorite level. Although there's two levels right now currently lining up at the two boxes, I mean in our red box, the favorite level for Fibonacci is usually 61.8%. Although it's not all the time, it's not going to be 100% of the time it's going to reverse at the 61.8%, but a lot of times it's the favorite level. Okay, so now that I found a Fibonacci retracement, I'm going to find more levels. I see a Fibonacci projection here that I can try to pull something off. Let's see if anything pulls off. Nothing. What if I use this swing high here? Okay, if I take this swing high here, okay, these two levels will line up. If I take this swing high here, sorry, if I take from this swing high, I guess the 78.6 is pretty near, but it's outside the box, so I'm not gonna take that into consideration. Let me see what else I can use. I'm doing a Fib expansion. Okay, I think we found our favorite level. Okay, so within this red box, where I think the action is most likely going to happen is either here, the one where I'm highlighting green, or here. Okay, so within this red box, I think price is going to reverse or break out. Either, I think it's going to okay. See, the thing is, I am a reversal trader, okay? So I don't really like to play breakout, so therefore, okay, just hold on. Well, I'm gonna have to, this is very hard because the weekly is showing a sell, but the daily is showing a buy. Okay, so is it a sell or a buy? That means when price gets to this green box here, something is going to happen. It's either price is going to bounce from here or it's going to do a breakout from here. Okay, I don't know because different time frames are giving me different information. So which time frame do I follow? I don't know. That's why now I need to pull out indicators to give me a bias on where I think the price is going to move. Okay, so I'm going to pull out Ichimoku and I'm going to see the conversion and the baseline. Yeah. Even the conversion and the baseline are confused. Okay, so for Ichimoku, if the blue line is below the red line, it's a sell. If the blue line is above the red line, it's a buy. Okay, but you can see the blue line and the red line keeps intertwining, right? It keeps intertwining because it means that there is no clear direction. When there is a clear direction, you will see this. You'll see this the blue line is clearly above the red line. Okay, there was this small little crossover and then it goes above the red line again. Okay, so even the blue line and the red line is intertwining means that the trend is there's going to be some kind of battle. I just don't know who's going to win. Okay, so if I have to come up something, I'm going to say I'm expecting, I'm not biased because I don't have a bias right now. I'm just expecting for price to bounce here. But if it doesn't bounce, it means it will be a breakout. Okay? And I think it's going to happen here. Okay, so within these two levels, I don't know which one price is gonna reverse off, but based on textbook, 61.8 is more of the favorite level compared to 50%, and also because there's three Fibonacci levels standing up here, so it makes me a bit more biased that price is going to bounce here at this lower level here. So I think price is gonna bounce at A or B, but more likely it's going to be B. Okay, more likely it's going to be B. So I'm going to remove everything and I'm going to just say that this is my favorite level of where I think price is going to reverse. So I'm going to change this to gold. Okay. Price is likely to bounce at green or gold, but more likely to be gold. Okay. Yeah, I think it's more likely going to be gold. I could be wrong, by the way. If it doesn't reach to the goal, it just means that I was wrong and price is reversing now. Okay, I'm just trying to see if prices, if there's any divergence. If I see a divergence, that means it's going to be a sell. Anyone sees a divergence? Okay, if price is going down and on the oscillator it's going up or going straight, it means that there is a bullish divergence. Okay, so let's look at that again. If price is going down, right? If price is going down, price is going down, and on the oscillator it's going up, it needs to go up, then we have a bullish divergence. Do I see price going up? I mean, if you really zoom in, if you really zoom in, price is kind of going up on the stochastics, right? You guys see this, right? I'm not the only one who sees this, right? Okay, you see if I pull out the channel, price is clearly moving on an uptrend, but on the charts, price is moving on a downtrend. Okay, this is the first sign. Okay, I've got my bias. I'm gonna take a wild guess and say that price is gonna go up from here. Okay? So my entry, okay, this is not a signals group, but my entry will be the question is where do I put the take profit? Back to the swing high. I think that's a very fair take profit. Okay, this is back to the swing high. One to six is a very good risk to reward. If you're being very conservative, honestly, I would also just aim back to this swing low here. This is just being very conservative. You can aim back to this swing low here where all this action is happening. Otherwise, actually that breathing space, you might want to give it a bit more breathing space for the stop loss. Yeah, maybe back to this swing high here. Okay, so I'm gonna leave this green one here because there's still a possible. I know it's very messy. Let me just think possible entry, but not favorable. Possible but not favorable entry. Would you organize other topics webinar in English? Okay, so I see markets. I'm only scheduled to do live analysis sessions for IC markets for English. In Bahasa, which is the other language that I do it in, I do other topics for Bahasa. It's just that for English, I don't. I think my teammate or my colleague does the other topics on Wednesdays. You guys can join her webinar on Wednesdays. It's the same YouTube channel. Okay, I know it's outside of the channel, but technically if it moves down and it wicks, you can just adjust the channel. Don't worry so much about the channel. The channel is only supposed to give you a structure of where price is going, but you should only use it as a reference, not so much as to like decide where price is going. Okay, so this is what I think is going to happen. So now I'm going to pull out DXY. Remember I was talking about correlation. Okay, if I want EUR USD to go up, that means DXY needs to go down. Okay, that means DXY needs to go down. By the way, if the stop loss is hit, it means that it's going to be a breakout and it's going to be a sell. And that means that the next time, moaning. Hi, Andres. The next time I see you guys, we'll probably do an analysis for the sell. But, I mean, I'm just doing my analysis based on what I see, right? Because I know, on the weekly, I know it says that it's a sell. On the daily, it's a buy though. So I'm just using like the daily as reference. And also, if you're looking at the 4 hours, it's technically still a sell. It's technically still a sell. I can still adjust it in a way where it can still be a sell. I mean, sorry, a buy. It's still a buy. So in a way, I could still adjust things to make it look like it's a buy. Okay, so this is the possible buy, not favorable. I just think that this is the more favorable entry. Okay, if it doesn't get here, if it gets here, I think it will probably reverse from here. But if it doesn't get here, I mean, even if it gets here, right, it would still be a, yeah. So we'll just need to see if price reverses from here. Okay, so how do I know if it's gonna be this entry A or B? How do I know if it's gonna be A or B? Look for the reversal. Reversal pattern candlestick. So if, hey, why didn't it come out? Okay, if you see a reversal pattern candlesticks forming here, here, okay, it means that A is actually the entry and B is actually not the entry. Okay, that means that you can move the stop loss higher. Okay, but I just think it's going to be B. I just think it's going to be B because again, 61.8 is the favorable level, and also because there are more Fibonacci levels standing up at B. So if A doesn't hold up, then the next entry is actually B. If B doesn't hold up, it means that it's a breakout and this trade is just lost. Okay, so for EUR to go up, DXY needs to go down. Okay? DXY needs to go down. So if we look on the weekly, DXY is on a downtrend. It's just that it has reached the support level as well, and it's probably time for a pullback. I just, you know what? So many conflicting informations. So many conflicting informations. Okay. You want to be careful with this. This is not a signals group, by the way. There is a chance it's going to become a breakout. Okay? There's just like, there's just things that are like showing us that there's a possibility of a breakout. Alright? There's just a possibility for a breakout. It's just that I need to come up with an analysis. So this is my best bet, but I think there's a chance it's also going to be a breakout. Okay, so I don't want to spend too much time on the EUR USD. Let's move on to the next one. Let's do ETH USD. Oh, it didn't end up selling. It went up actually. Not very confident. Therefore, if enter, will enter lowers. I did not enter this, by the way. I did not trade at all last week because I'm still not feeling well. Okay, one more will be gold. Gold is just not coming down. I cannot do analysis on gold because structurally there's nothing for me to work with. Okay, so we're gonna leave gold alone because price is constantly moving in a zigzag, right? So right now it's right now. I need it to like kind of do some kind of structure so that I can know what's the next move. Okay, so let's do ETHUSD. I think it's going to have a hard time breaking this zone. Okay, so I think it's going to have a hard time breaking 3.7 because it's a weekly resistance unless it's making a new high, which, you know, I don't bet on new highs. Possibly due for a reversal. right? It's possibly due for a reversal. Yep. On this side, it brings a higher low. On charts, it looks like a bottoming pattern is in meaning that if it breaks resistance, the euro would break its support. Yeah, that's why I'm a bit conflicted with this buy. I think this is a dangerous buy. I think this is a dangerous setup. Okay, because there's a chance it's just because there's so many conflicting informations right now. So I mean it doesn't matter, right? Because if you're only risking 1%, right? If you're only risking 1%, if you get it wrong, you only lose 1%. So if you're using proper risk to reward, right? If you're using proper risk to reward, it shouldn't even be a problem. It's okay to be wrong. So if I get this wrong, I'm totally fine with getting it wrong because I'm only risking 1%. Actually, I might risk 0.5% because of how risky, how conflicting the information is. Yeah, I'm only gonna risk 0.5%. Yeah, so sorry guys, I only care about one analysis and it's not a high probability type. Okay, let me come up with something for this. Hi AJ. Hi. If you're wondering why the webinar is started so early, we're already 50 minutes in. It's because I'm not feeling very well. So I need to start the webinar early, end early so that I can go to see a doctor after this. But yeah, it shouldn't be a problem, right? Because this is recorded. These webinars are recorded, so you guys can just rewatch it. I'm thinking a reaction's gonna happen somewhere here, or maybe slightly higher, but I think a reaction is due to happen soon. Okay. I think a reaction is due to happen somewhere along this line. Oh, okay. Okay, guys. I'm gonna call for a breakup. Yeah, I'm gonna call for a breakup for this, rather than a sell. Okay, so if price breaks this, comes back and retests, and successfully retests this area, I think it's going to be a continuation of a buy, right? But it needs to break this area first. Okay, where is the take profit? I cannot really give you a take profit because we're already at a high. We're already at the highest point for Ethereum. So I cannot predict another high because structurally there's nothing for me to predict. Okay, structurally there's nothing for me to use. But I think if price doesn't hold here, it's most likely going to go up higher. Okay, if price doesn't hold here right now, this gold box is most likely going to go higher. If it holds, it means that there's a good chance for a sell. Sell where? Sell back to the swing low and the stop loss being here. Okay, the stop loss being above the last high. So it looks like a 1 to 2. Sorry, maybe that's a little... Okay, it looks like a 1 to 2 trade. 1 to 3. Okay, not bad actually. Not bad. So maybe slightly higher. Okay, so we can go as high as here technically. Stop loss being just here. So I think there's gonna be a reaction on Ethereum, more likely gonna be here. There's gonna be a reaction for Ethereum in that gold box, but more likely within the green box. Okay, so this is all I have for Ethereum. If this box does not hold, that means price is gonna go higher, and then we have to reanalyze it on a different time. Yeah, I think EUR is questionable. It's a question mark. I'm not very confident with this setup because it's a dangerous setup. Okay, let's do something that is not US dollars related. Let's do GBP JPY. Okay, GBP JPY definitely wants to go higher. Okay, I'm calling for a buy for GBP JPY. It broke this resistance area, which is a very strong signal. Okay, it's a very this green box. Okay, so sorry, blue box. So it broke this blue box. It's a very strong signal of like wanting to go up higher. Okay, so the next swing high that I see is here. Okay, that's way too far. That's not being conservative at all. You know, I always want to be a bit more conservative. That's aiming too far. Okay, so I'm gonna call for a buy for GBP JPY. I just need price to pull back a little bit more. Pull back to where? To the start, to the breakout area. Okay, so I think price gonna pull back to this area here. By the way, guys, I'm just being very honest. Okay, I'm gonna tell you guys the truth. I am not the best breakout trader. Okay, I am not the best breakout trader. Therefore, when it does the pullback, it's gonna be a little risky. Okay, so it's gonna look something like this, and your take profit will be back at the last swing high. Okay, so right now the price has not formed the swing high, but once it forms the swing high, I expect wherever that formation happens, could happen here, 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 right now, whatever it is, when that formation happens, that's gonna be the take profit that I'm aiming for. Okay, that's going to be the take profit I'm aiming for. So this will be a very low probability setup. I mean low risk to reward. You can try to aim for a better entry. Okay, so once that formation ends, hi Jamilu. Hi Jamilu, you're just joining now, but we're ending already. Okay, for those who just joined, so usually we start our webinar at 5:30 p.m. Singapore time. I chose to start like an hour earlier today because I'm really not feeling well. So I wanted to start earlier so I can end earlier and then I can go see a doctor. So it's okay. This thing is recorded. So for those who are just joining, just go and rewatch the recording. Okay, so after I end the webinar, it should be recorded and it should be on YouTube. Just watch the recording and you can fast forward and you can, yeah. But basically, you didn't really miss much if you. This is what I think is happening for EURUSD. So EURUSD, I'm calling for a buy either from this green box or this yellow box. The yellow box is more favorable. Okay, B is the more favorable entry, but of course we need to see if what happens here at the green box. If reversal pattern candlesticks form at the green box, then maybe it's just going to reverse from here at the green box. But obviously you need to wait for the candle to close and you need to see what forms here before whatever. Okay, this is a dangerous setup. Okay, this is a dangerous setup. I'm calling for a bounce. I'm calling for a bounce, but there is a possibility that it's going to be a breakout. Okay, I'm calling for a bounce, but there's a possibility it's going to be a breakout. Why? because on the weekly charts, it's already showing that it's due for a reversal. Okay, it's due for a reversal. So if on the weekly it's due for a reversal, it means that it's a sell. It's just that on the daily charts, it's going on an uptrend. Okay, so do I follow the daily? Do I follow the weekly? This is why this is very confusing, and this is why this is a dangerous setup. Okay, so we just have to wait for price to show us what happens. Um, Other than that, I'm calling for a buy for GBP JPY. I just need price to pull back. Okay, I need price to pull back to somewhere within this blue box, and then that's gonna be where my buy entry is gonna be. Okay, because why it's it's a very clear breakout. It is a very clear breakout. I don't think this is a fake out. Why? Because it's of this gap. Do you know for price to gap, it means that there's so much upwards momentum that why price can just gap, okay? Because of this gap, it's giving me confidence that price wants to go higher. So therefore, right now, I'm just waiting for a pullback to see if price goes higher. Okay, Ethereum, I think, I'm not very confident, but I think there's going to be a reaction somewhere in this gold box, more specifically in this green box, okay? The reaction, I'm a bit more biased of it reversing, okay? But again, we need to see how charts play out, okay? So I'm done with the webinar for today. For those who came in at the scheduled time, I'm sorry I had to start a bit earlier today. I will catch you guys next week. I'm just gonna rush off to see a doctor. I'm really not feeling well. Or I'm just gonna go rest right now. Okay, so I hope you guys get profitable trades. I hope you guys are profitable. Oh, by the way, for those who came in late, we did a review on last week's setup. So I did call for a buy initially for EUR USD, but then later on, I saw that there was a breakout and I changed my analysis to a sell. Okay, so then the sell played out, and hopefully these whatever that was happening today plays out as well. Okay, so bye guys, take care. I'll see you guys next week Monday. For those who can speak Bahasa, I'm doing a Bahasa webinar tomorrow. I think I'm doing a topic. I think I'm teaching technical analysis tomorrow. I'm not very sure. Okay, wait, actually, let's go and see together. What am I teaching tomorrow? Hold on. Okay, so tomorrow is the 11th of October. Hey, why is there a... Oh, sorry, tomorrow is the 7th. Okay, so tomorrow I'm doing another live analysis session, but I'm doing it in Bahasa, so I'm doing it in another language. Okay, then next week I'm going to be teaching Elliott Wave for Bahasa. Okay, but for English it's basically just I do live analysis session every Monday. If you guys want to learn topics, you want to learn different indicators, you want to learn different things about trading, you can join Peggy. Peggy's my teammate, by the way. Peggy does topics on Wednesdays. Okay, so introduction to trend indicators. You guys can go and join that if you guys are free. Okay, so that's all I have for you guys today and this week. I'll catch you guys next week. Bye.